24 hours ago, a single headline hit the tape. Trump revamps his personal portfolio, adding NVIDIA and a basket of AI names. Within minutes, the stock rips through 2 layers of resistance that held for 3 weeks. But here is what the crowd is missing. Every time a high-profile endorsement floods retail into a breakout, the institutions use that liquidity to unload. Right now, there is one danger zone and one hidden opportunity today. I'll show you both. Stay until the end. I'm giving out 3 exact entry and exit levels you can use immediately, complete with stop losses and risk-reward ratios. This is not a drill. My session bias for NVIDIA today, trending with a trap warning. We are in a strong buy structure on the daily and the 5-hour, price is above every major moving average, but we are hovering just above a massive breakout pivot at 235. The invalidation level that proves this bias dead wrong? A daily close below 231.35. Write that number down. 231.35. If we close below that today, the whole bullish structure fractures, and we are likely heading straight for the 218 support grave. That's your line in the sand. Now, let's walk through the chart from top to bottom, because there is a subtle divergence most traders are completely ignoring. Let's start with the weekly and daily picture. Pull up your charts. On the weekly time frame, NVIDIA has been in an unchallenged uptrend since the start of the year, making higher highs and higher lows. The 20-week moving average, sitting around 195, is angled up sharply. The 60-week is at 160, and the 200-week at 122. This is a staircase of institutional support. But here is the first crack. The weekly MACD histogram is still positive, but it has been flattening for 4 weeks while price has accelerated higher. That's a negative divergence in momentum. Buyers are exhausted, even if the headline trend screams strong buy. The last time we saw that pattern, the stock corrected 12% in 10 sessions. So, we are cautious bulls. Dropping down to the daily chart, price just exploded through a dual resistance cluster, 231.35 and 234.87. Those were the ceilings for the entire consolidation range that trapped price since early April. Now price is at 235.75, and those former resistance levels must flip into support. The 20-day moving average is at 215, the 60-day at 200, and the 200-day at 175, all sloping up like a launchpad. The daily MACD has just printed a fresh bullish crossover, but again, the histogram bars are thinner than the prior impulse. This suggests the breakout is running on fumes of the Trump headline, not genuine structural demand. I want you to watch the S&P 500 futures here, because NVIDIA has become a liquidity-tied indicator. If the ES stalls at 5750, NVIDIA will likely pull back to test the 234.87 region. Cross-asset linkage is screaming that risk appetite is stretched. Now zoom into the 4-hour and 60-minute charts. On the 4H, we are in a channel breakout. The 20-period MA on 4H is at 229.80, pointing north. The 60-period is 222.15, and the 200-period is 209.50. Price is extended above all of them, which is why a mean reversion move is highly probable. Look at the 60-minute chart. The MACD is losing altitude, and we are forming a tiny bearish divergence on the RSI. The Trump news spike printed a long wick above 236.50 before settling here. That tells me there is selling pressure into strength. The key support zone for active traders today is that 234.87 to 231.35 zone. If price pulls back and holds that area, we have a textbook bullish continuation. If it fails, the next support is 222.32, then 218.81. But remember, we have a psychological magnet at 250. Round numbers on a cult stock like NVIDIA act like a vacuum. Yesterday's core news fundamentally altered the short-term narrative. Trump revamped his personal portfolio, adding NVIDIA and other AI names. This is more than a headline. It triggers a cascade of retail and algorithmic buying, because high-profile endorsement is a sentiment accelerant. However, the smart money often uses these spikes to distribute. We saw this exact pattern after Elon Musk's AI comments in March. The stock surged 8% in a day, then gave back 12% over the following 2 weeks. So, the question becomes, is this time different because the AI spending cycle is actually accelerating? Yes, the fundamentals are robust. Data center capex is at record levels, and NVIDIA's next earnings whisper is bullish. But the near-term price action is driven by positioning and gamma. Here's the cross-linkage you need. NVIDIA and the S&P 500 are joined at the hip right now. The correlation coefficient over 20 days is 0.91. When the S&P 500 rallies, NVIDIA leads. When it drops, NVIDIA drops harder. Keep an eye on the VIX and Treasury yields. If the 10-year yield spikes above 4.5% again, growth stocks like NVIDIA will get crushed, regardless of the AI narrative. The bond market is the antagonist here. Another key link, Bitcoin. BTC has stalled at 72,000 and funding rates are elevated. A crypto flush would signal risk off, and NVIDIA, as a risk asset proxy, would follow. So, for the next 1 to 2 weeks, my directional lean is cautiously bullish as long as 231.35 holds. I see a grind toward 250 to 255. The invalidation of this thesis? A daily close below 231.35, or a break in the S&P 500 below its 50-day moving average. If that happens, the AI trade unwinds fast. Most people will skip this, but this is where money is made. Keep watching. I'm about to hand you 3 precise setups. Write these levels down. Strategy 1, the sniper, conservative. This is for patient traders who want confirmation. Wait for a pullback to the 231.50 zone, which is the upper edge of the prior resistance cluster now turning into support. Your trigger. Price must tag 231.50 and then print a 1-hour candle close back above 232.80 with a bullish engulfing pattern. Entry at that candle close, around 233.00. Stop loss goes at 229.40, just below. The 4-hour 20 MA and a recent swing low. That's a 1% risk on position. Target 1 is the breakout point at 235.75, for a quick 1.2:1 reward. Target 2 is the psychological magnet at 250.00, giving you a risk reward of 4.7:1. This setup is voided if price fails to reach 231.50 and instead breaks down through 230 with volume. Then you stand aside. Strategy 2, the active trader, standard. If you are already positioned or want to ride the momentum, this is your play. The entry condition, buy on a 15-minute pullback to the 234.00 area, which is the previous day's breakout level and today's intraday liquidity pool. You need to see a bullish MACD crossover on the 15-minute chart and a spike in relative volume to confirm absorption. Stop loss goes at 232.80, below the 60-minute value area low and the 234.87 resistance turn support. That's a tight 0.5% stop. Target 1 is 238.50, just before the next psychological wall. When that hits, move your stop to break even. Target 2 is 242.80, the 1.618 Fibonacci extension of the April range. From 234 entry, that's a 3.6:1 reward. Trail your stop using the 15-minute 20 MA once target 1 is hit. Invalidation, a break of 232.50 with a strong red candle on the 15-minute chart. If that happens, you exit immediately. Let's see how aligned we are. Type your NVIDIA range for tomorrow in the comments now. I'm reading them, and I'll pin the most accurate call. Are you seeing 240 or 225? Put it down. Strategy 3, the aggressor, high risk. This is a countertrend short for those who can lose small and manage risk aggressively. The logic, the breakout is overextended, and a bull trap is forming. If price fails to stay above 235 and breaks back below 234.87 with a 30-minute close, that's your trigger. Entry short at 234.50. Stop loss tight at 237.20. Above today's high and the 236.50 wick. That's a 1.1% risk. Target 1 is 231.50. The must-hold support, for a 1.1:1 reward. Target 2 is 228.00. The 4-hour 60 MA, for a 2.4:1 reward. This is only for traders who understand that a trend is still strong buy, so you are fighting the tide. If you are wrong, you take the loss and flip long on the strategy to pullback. Explicit warning, only for those who know how to lose small and manage risk aggressively. This is a trap play. Never risk more than 1 to 2% of your account per trade. No positions through high-impact economic news. Today we have the ISM manufacturing PMI at 10 a.m. Eastern. Stops are non-negotiable. A stop is not an opinion, it's an exit. The most critical level for the next session is 231.35. As long as that floor holds, NVIDIA can shred the doubters and melt toward 250. A daily close below it, and the AI balloon pops, we target 218. Tomorrow, I'm watching the S&P 500 futures open and the 10-year yield. If yields tick down and equities hold, the breakout is real. If yields spike, the NVIDIA bull trap is confirmed. If you want the full breakdown on Bitcoin and the S&P divergence, where I'm seeing a major liquidity grab at 73K, that video is live now, check the end screen. Smash like if this analysis gave you a clear plan, subscribe and hit the bell for daily coverage across 8 key assets. I'm giving you the institutional playbook before the herd moves. I'll see you in the next one.